AP, New Delhi. Indian billionaire Gautam Adani, who is in hot water over allegations of fraud by a US-based short-selling firm, said on Thursday that his conglomerate will review its plans for raising capital after canceling a $2.5 billion share offering by his flagship company that would have raised millions of dollars. Late on Wednesday, Adani Enterprises stopped the share offer, citing market volatility. Stocks dropped when Hindenburg Research, which has a history of driving target stock prices down, accused the organization of engaging in brazen stock market manipulation, accounting fraud, and other financial wrongdoings. After its economy was liberalized in the 1990s, energy-hungry India developed quickly, and Adani made a tremendous fortune from mining coal. The Adani Group of Companies manages major metropolitan airports, constructs highways, produces power, makes defense gear, develops agricultural drones, sells cooking oil, and has a media station. Adani Enterprises had lost a staggering 28% of its value by the time trading ended on Wednesday. But more than the 45.5 million shares made available to the public, approximately 51 million bids were received for the share offering. 6 other public firms owned by Adani saw their stock fall between 2% and 19%. Adani Enterprises was down 5% early on Thursday. 4 of Adani's other publicly traded companies saw a 10% decline in stock price, while 2 more saw declines of 5% to 8%. "The interests of my investors come first and everything else is secondary to me," he declared. Adani Enterprises declared in a statement that it will cancel the deal and give the investors money back. It said that the group's balance sheet was extremely solid, with strong cash flows and secure assets, and that the decision would not have any influence on our ongoing operations and future plans. Asserting that the organization was performing the greatest fraud in business history, Hindenburg said that it was betting against them. It said that because to their exorbitant values, the 7 major Adani-listed companies had a 85% downside, just on a fundamental basis. In response, Adani Group referred to Hindenburg's research as a planned attack on India, the independence, integrity, and quality of Indian institutions, as well as the growth story and aspiration of India, and rejected Hindenburg's claims. In a 413-page report released on Sunday, it dismissed the questions, claiming that none of them were based on independent or journalistic fact-finding. In its reply, Adani provided documents and data tables. It claimed that the group had complied with regional regulations and completed all relevant regulatory disclosures. The upper house chair on Thursday rejected a request from opposition legislators to discuss the claims made by Hindenburg, forcing the parliament to adjourn for the first half of the day. The central government of India and its finance ministry have not yet made any statements regarding the collapse of the Adani stock. Adani's position as the wealthiest person in Asia and India was forfeited on Wednesday due to stock losses. He dropped from 3rd richest man in the world to 13th as his wealth fell to $72 billion, according to Bloomberg's Billionaire Index. His net wealth was roughly $120 billion before the Hindenburg report. Thank you for listening and don't forget to subscribe.